Talk to any small cap fund manager and they'll tell you something that won't surprise you at all. Buy small caps, shock, horror. But there is some merit in looking at the small cap space. So here to digest all of that is Henry Ince from the manager research team here at Morningstar. Henry, thanks for being with me. Just for the uninitiated in the room or viewers that don't know as much about this as they might do the large cap space, what do we mean broadly by a small cap?
Sure. Oh, it's great to be here, Ollie. Small cap definitions vary depending what market you're looking in, but generally a good rule of thumb is the bottom 10 to 15% of the market cap. So that can look very different in the UK, where you have companies as small as 40, 50 million in market cap, versus the US, where you've got companies that have multiple billions. So yeah, it's quite a broad spectrum.
Sure. And in terms of their advantages, you know, the small cap fund managers will say, shock horror, you should buy small caps, but you have a more independent view on this, you know, being part of the manager research team. What are their advantages?
Sure, I think small caps offer generally a lot of growth potential. So often these are companies that are in infancy. So, you know, they might be adopting new technologies or be innovating. So really, their potential to capture significant market share or create markets of their own is significant. But these companies might also be sort of dominant players in fairly niche markets, so have small monopolies. So therefore, there is a wide range of drivers, but generally small cap should be the sort of key growth driver of a portfolio.
And turning to the UK, I mean, we often talk on the editorial team here about, you know, what's going on in the FTSE 100 and the 250, perhaps to the neglect of the much smaller companies. Why are UK small caps so attractive?
So taking a step back, the UK is cheap, and UK small caps are probably even cheaper than that when we look at several different valuation metrics. But it's not just about them being cheap. There is a lot of innovation in the UK. So looking at sort of some global innovation indices, the UK is much higher than a lot of other developed economies. So there's a lot of innovation and entrepreneurial spirit here. But there is also a lot of growth on offer. So looking at the NASDAQ, the earnings growth over the next 2 years is predicted to be around 23%. And that is the same as the FTSE AIM. However, the NASDAQ is trading on a PE of 24 versus a PE of 13 for the FTSE AIM. So very different very different valuations, but similar growth profiles.
Interesting. All right. And then just finally then, in terms of income, because one thing that UK investors love is income and specifically dividends. What are the dividend profiles of some of these small cap companies?
Sure. So next year, I believe it's actually forecasted that the FTSE small cap is going to yield more than the FTSE 100, which may sound surprising given all of these big dividend players and dividend aristocrats and all of that. So there is income outside of the FTSE 100, and you know, for people blending portfolios and trying to diversify income streams, small caps actually offer quite a lot of diversification opportunities.
Brilliant. Henry, thanks so much. For more on income and indeed the small cap space, check out any of Morningstar's international editorial websites, but of course morningstar.co.uk. Until next time, my thanks again to Henry. I've been Ollie Smith for Morningstar.